In a call with financial analysts, 3 Alphabet executives played it safe by repeatedly using the words uncertain and uncertainty to describe the current economic climate. For starters, ad revenue on YouTube grew at its slowest rate ever in 2018. However, investors shifted their focus to the fact that Alphabet's biggest revenue generator, Google Search, had a better-than-expected second quarter. After the data were announced, Alphabet stock jumped 5.5% in the extended trading session. One analyst at investing.com, Jesse Cohen, stated, "Despite the underwhelming quarter, expectations were so low that investors blew a sigh of relief." In contrast, Snap Incorporated stock dropped more than 25% the previous week after the firm missed sales expectations and warned of a coming downturn in the ad industry. Executives from Alphabet said that Google felt the effects of the downturn much like their customers were due to supply shortages and lower demand. Some advertisers cut back on spending this year because of growing costs, including labor and commodities. When compared to social media companies, Google proved more resilient. Search advertising frequently proved cost-effective for clients as it mostly contained text, and its wide range of tasks within the ad market contributed to its stability. Clients typically prioritize search ads since they reach people actively looking for the things they advertise. Travel and retail advertisers drove a roughly 14% increase in Google's search ad sales during the second quarter, totaling $40.69 billion, which was higher than the $40.15 billion projection from FactSet. 81% of Alphabet's Q2 revenue of $69.69 billion came from Google's advertising sector. The average forecast of investment experts tracked by Refinitiv was $69.88 billion. Thus, this number was very close to that. Analyst at Insider Intelligence Evelyn Mitchell said, "Google is relatively well positioned to weather the rough waters that lie ahead." Sales challenges. Numerous factors have raised apprehensions about Alphabet's prospects. Like many other large U.S. multinationals, Alphabet needs help with lower returns when converting international earnings to dollars due to the currency's strength. As reported by Alphabet, almost $72 billion in potential sales were lost due to currency changes. Approximately 55% of the company's income comes from outside the United States. Alphabet's chief financial officer Ruth Porat predicted the currency impact would be even more pronounced in the third quarter. In light of increasing scrutiny from antitrust regulators worldwide, Google has begun to take a lower cut of the money made by third-party developers selling their apps. During the second quarter, users also spent less money on applications. YouTube's ad revenue shifting as advertising choices gained and lost popularity further contributed to the company's financial woes. Google also temporarily halted sales in Russia due to the situation in Ukraine. According to FactSet statistics, Google's cloud division saw revenue of $6.3 billion, short of analysts' estimates of $6.5 billion. In comparison, YouTube's advertising revenue totaled $7.3 billion, short of analysts' estimates of $7.5 billion. Netflix's decision to use Microsoft's ad technology for its debut foray into advertising on its streaming service earlier in July was a significant blow to Google's sales efforts. Although Google is used to gross profit margins of as much as 60%, the company, like its competitors, has restricted employment in some divisions to manage spending better. Do you think Alphabet could do better? Let us know in the comments below.